Good afternoon, good evening, everybody. I got an article here from Esquire 2013 edition, June issue, and it's called "The Portfolio" by Ken Curson, and it says the housing market returns now. It's been a while, but time to get out your wallet. So I don't want a little dust there. Spring cleaning. Anyway, it says here, it says my fact checkers at Esquire won't allow me to cite it as a source, but the single scariest article on Wikipedia is real estate bubble, the South Sea bubble, and the Dutch tulip bubble, or even the crashes in American equities in the 1920s and 80s were financially ruinous for many people, but I'd argue that the crash in real estate markets worldwide from 2007 to 2010 was most destructive form of wealth collapse ever. Each previous collapse had its center a class of investors who should have known better, while they all produced innocent victims. It's hard to feel too sorry for those at the core of the pot bubbles when they got into them looking to get rich by speculation. The housing bubble was something different altogether. Ordinary Americans were pressured, damn near forced, when you consider the tax advantages and the government award homeowners into buying something they couldn't afford, and they weren't buying tulips or even shares of stocks whose diminutive in value hurt only on paper. Now, millions of Americans lost most of their valuable possession. After 4 years of debilitating fear and a market flooded with ownerless houses, the ride has finally begun to turn. In fact, I believe the housing market, home building especially, is about to surge. The best part of it is that it's a free market in the driver's seat. Not stimulus or tax incentives, social engineering, or over-leveraged banks on Wall Street derivatives. In December, total home sales climbed 5% from the month, and 3.6% above level of the previous year's inventory of single-family homes declined more than 10% of the month, fell at almost 20% compared to the previous year's numbers. The trend continued into this year. Existing home sales rose again in January and February, and inventory shrank compared to last year's. This marked the first sustained good news for the housing market since the mid-2000s, and even longer if you view the 3 years of the housing boom to be a fiction authored by a securitized Asian market in cahoots with the ratings agencies. During the bubble, home ownership in America increased from an eyebrow-raising 66% to a just plain silly 69%. The idea that more than 2 of every 3 households should own their dwelling is unprecedented in human history. And that's all it was, an idea, a nice one, but unsustainable as we witnessed, dangerous. I believe the sweet spot for American home ownership is somewhere between 60% when the rates are higher and 64% when the rates are low. And by the end of 2011, the rate has fallen back to 66%. But more to the point, if the millions of borrowers who are delinquent in their homes are excluded from their rate and are really not owners, if what they own is worth less than what they owe, the rate will close at 60%. Credit Suisse says the prospective buyers and busiest Credit Suisse says the prospective buyers are busier than they are been since 2005. This move is already underway, and while the stocks of builders such as Toll Brothers, TOL, and Lennar, LEN, have risen modestly, Hanovian, HOV, has nearly doubled already this quarter, and Pulte, PHM, has climbed almost 50%. 50%. Part of these gains aren't real spectacular. Speculators shorted the hell out of the company. Part of these gains aren't real. Speculators shorted the hell out of these companies when they looked as though the weaker one could easily disappear. So as they started to climb, short sellers were squeezed into buying. Nevertheless, the iShares Dow Jones U.S. Home Construction Index Fund (ITB) is up 25% on the year as of mid-March. The Home Builders Spider, an exchange trade fund ticker XHB, is a bargain in 20. Even as XHB is a bargain, even at 20, even as it nears territory unseen since 2008. There has never been a time when the major home builders who comprise these indices had so much going for them. Enormous pent-up demand, historically low mortgage rates, and ultra-cheap labor force from a decimated construction industry. And it goes on to say, I think XHB could reach 30 by the end of the year. And I think anyone who can afford to buy a single-family home and a clear mortgage ought to do so and rent it out to the giant pool of renters that's been created by underwater homes and lenders who won't lend. Most of all, I urge anyone who's struggling to pay a mortgage that's bigger than a house is worth willing to hang on. Help is on the way, in the form of what should be allowed to help in the first place of market forces. That's that article from Esquire, 2013.